Hello, everybody. Welcome to Trading Gains Volume 3, 115.24. So this is about the fourth attempt that I've made at making this video. Everything I said just sounded stupid. So I'm just going to start from scratch, and hopefully this is gonna work for you guys. All right, so let's take a look at the 10-year yield. So the 10-year yield here, I do think we're seeing a turn, or we're getting close to a corrective sort of bottom or some sort of capitulation move in bonds. Now this is just freehand, ABC down here, but this is also short term. Wave twos are typically sharp, and we could see maybe a larger bounce up here, um, and for a last little move down here, and that could be our wave two. Now, if that would happen, that's where I see us having a bit of a challenge here with equities, where since we are currently short, if we pull up something like Nasdaq, kind of how I think this might work out here for us with the 10-year is this is I guess the bullish scenario. So we're seeing this sort of move up, this impulse wave up here, but we're also seeing this pretty large consolidation triangle. Now, most of the time these consolidations around, whether it's a wave two or a B wave, you could typically see triangles at B waves. So I guess we have to wait and see if we breach 1680.70 for Nasdaq. But I guess the main thing I wanted to get across was that if we do see that move in the yield, and if we add the yield on top here for the upcoming week, we can see it's pointing down right now. But if we were to see that sort of, I guess that sort of move we just charted out here, we might see like a pullback and then potentially like an all-time high or getting close to it. And this is still using the futures tickers here, but you would see a corresponding move in the QQQ or SPY if we're looking at ES. But that's the bullish scenario. And if we were to layer on this 10-year, this view here, this is sort of what we would see. Let me remove the 10-year. So I'm thinking that's pretty much what we would see here. But I don't know if that's quite going to happen. Again, like a lot of these wave twos bounce at 618. And if we are going to see some sort of rally in the yield, then equities really just won't last long. Now, if I remove some of this junk, actually, sorry, I'm going a little too fast. Let me get back to this. This is why this is the fourth attempt to make this video. Um, just keep going, like the internet Energizer Bunny on a Sunday night. All right, so let's take a look at the dollar. So the dollar is actually making an interesting move here. It's kind of breaking out of this ascending channel. Now there's a possibility we could see something like this um, as it continues and the pattern just expands. But the reality is we won't know. The dollar and the 10-year are pretty much locked together. But I'm still thinking that the bond bears are going to try to sell. They're going to try to um, sell down here, and the yield is going to crank up. But I really don't know if that's going to be the case quite yet. We did see, hot econ data coming through here, higher for longer. That's kind of how that translates to me. But I still think that we might have an opportunity here for just one lower low and a chance to get out of this TMF position, which was taken out last week. And then we also might want to load up some more TMV to take advantage of that. All right, so let's take a look at the Nasdaq just in more detail here. So let's talk about the bear scenario, because I really do think that this is a more likely scenario. We have this sort of neckline here, I guess you could say, for like a head and shoulders pattern that's developing. And I don't want to scare the crap out of everybody, but the reality is, we haven't been able to make a new high here. We've been kind of bouncing around. And if we zoom out, this is where things start to get a little bit more interesting when you're looking at chart patterns. So buckle up, all you chart nerds, because this is kind of where you got to use your analysis skills, and where we need to, kind of use our gut and really just use that, that non-scientific charting sort of gut feel for what we're doing here. So if we look at this, I talked about this last week. We see this big, this huge, I guess you could call it a B wave for now. Um, on a larger scale, we could see something like this because we did see this completion, and that would be a huge drop. So let's not go that far that fast. But we did see this completion of a 5-wave pattern. This is very, very clear to me. When you look at something like ES, it's not super clear, uh, but it does look more like it's in a ascending channel here. Now, I'm not sure if we do see something like this longer term ABC in a bullish sense, but for Nasdaq, this is looking very, very clear to me that we've seen a 5-wave up and we've seen a completion of that. And if we start to remove all the junk on the chart, and we start to just get a little bit more of a feel of what we're starting to see here at the daily level, this is where I think a lot of the value is going to be from at least doing this video or talking through the reasons as to why. Now we see this sort of move. To me, this looks like a pretty clear ABC. Now I know there's a lot of bulls that are just totally hook, line, and sinker that we're making all-time highs. Where everything's going to be great. Total euphoria. Nobody's actually considering that this might actually be it, ladies and gentlemen. I do think that this is going to be a decently long-term top. Um, and if we're starting to do some measurements on what we could actually see here, if we do, like if we don't make a new high, again, we need to hedge our shorts here if we ended up reaching, like, let's say 17, 85, something like that. But I think that what is more likely is we'll see something like this, where typically like wave threes extend. We might see some sort of retracement here of our. Here we go. So it's a little bit more easy to see. I think we might see this larger A leg down. Now we have stayed at this upper limit for an extreme amount of time. It's just like I've seen tops before, and this is just taking forever. And I think everybody else is kind of feeling the same way. Like, I mean, if you have billions of dollars worth of shares and you've unloaded all of them, what else are you going to do? You're going to sell down the market so you can buy low and sell high again. I think that everybody's pretty much had enough consolidation, or they have enough position adjustment after the year, enough strategy decisions, all those sort of things, where I think that we actually might see a pretty decent slide here over the next couple of days, maybe maybe a week, 2 weeks. Now again, this could be totally invalidated if we make a new high, and then we have to start looking at things like ending diagonals or things like that. But as of now, today for this video, we're going to assume that this is it. And if it's not, then I apologize in advance, and you guys can immediately delete the video or not watch it, or harass me in chat, whatever you'd like to do. That's totally fine. But for right now, I'm getting kind of excited because I feel like the short positions might actually pay off, and I think the volatility is going to start to spike here pretty soon. So this is just a quick view of what we might see for the Nasdaq here, and I don't want to drone on too much about it, but I just wanted to show you guys some of the higher level views and kind of why I think a certain way. Now, after we saw this large 5-wave up here, again assuming it's complete, but it does look like it's complete. We've seen this here, and it really is going to have to coincide with this bounce in the yield. Now, if you layer on the yield on top of this, you can see that we have a pretty tight view here if we're looking at the last really since July. It hasn't really changed very much at all, and that's where I think the again more of the value is, where we see this sort of this connection and correlation, and it really just continues to manifest itself into like the opposite for equities. So without droning on too long, again, I already said that, but I just wanted to show kind of what Nasdaq looked like here. Now again, this could be something different. We could see, again, because we have a triangle, and we could see an A equals C, so maybe down to 16,231, or maybe down here to 16,036, further and further. We could see that, sure, why not? But I still think that we've gone very high, very fast, and I think that we're due for a pretty decent correction where people are going to start to head for the exits pretty quickly. So let's take a look here at ES, or the S&P. We're also seeing a triangle here, but in prior experience. I mean, again, you can see that this, it's pretty closely mapped to the yield. So if we take this off and we take out some of this other junk and trend lines, this has been knocking up against the top of this larger term pattern here. And sure, I mean, you can draw the lines however you want. Technical analysis is not super exact and precise. Sometimes you have this testing of the top here, and it just keeps getting sold down, which is what I think is what's happening right now. We have these moving averages and things that keep getting in our way, and as as we see these things turn, excuse me, let me just get all this junk out of the way. But I do think that this is the start of something that might be a longer term, like a wave. So sort of like how we had in Nasdaq, where we see something sort of similar like this. We test some support. Um, this is not, this is not within uh, the realm of completely crazy, at least as far as I'm concerned. Because if you zoom out and you look at this pattern, you could also make the argument that we're looking at the connection points, and we have several of these connection points on the ascending wedge here. But as we need to correct some of this just massive run up that we've had ever since the end of October. I mean, I don't know about you guys, but I remember the day it turned. I just wish it would have held out of the longs. But the day that turned, um, kind of thought that we might see like an ABC up, and we never actually ended up seeing that. We just saw this complete run up. So we do have to have some sort of corrective move. And if we were to take all this other junk out of here, let's say that this 50% retrace here, if this was going to be like an ABC move up, the target here is about the 4,500 region. And I don't think that's unreasonable. I think having a pullback to the 4,500, or let's say 4,508, is more than reasonable, at least for the like a first leg down. Now, if we measure that, that's still going to be about 6.8%. Let's say it goes a little bit lower to test some more moving averages, whatnot. We could see some pretty decent, some pretty decent and quick selling, I think. Kind of look at what happened back in July, and some of the other events like that, where things were going just fine. We topped for a while, and then we just kind of fell off a cliff. I feel like that's what's coming up here. And again, I'll still keep adding commentary here, but this is what I'm thinking we're going to see here. And we loaded up a bunch of SPXL, or sorry, SPSX, and didn't say that right. It's getting a little late. SPXS, and we have SQQQ. So we loaded up right around here, and even though it's feeling like it's a little bit burned right now, I still feel like we're going to be the ones laughing in about 2 weeks' time here, and I really hope so, because this top is just, there's been zero volatility, and it's been really kind of difficult to watch the paint dry here over the last 2 months, or not 2 months, sorry, 2 weeks. All right. So with that being said, let's take a quick look at the Dow. The Dow is doing something like chopping everybody alive. It's just a terrible chop zone here, but this still looks like a decently pronounced wave 2 or B wave. So I guess it remains to be seen. I'll publish some charts that have some firm levels like target 1, target 2 to keep an eye out for. But for the most part, if we zoom out, there is a case here for this to turn into just a shallow wave 4, like maybe do some back testing here around this like 36,627, and then shoot up to again more excess, more all-time high. But what comes up has to come down. And if we look at ERDI, it typically leads, but if we look at this sort of structure here, it really hasn't rebounded at all. I mean, I think it's just been getting hammered here and really hasn't had any relief for a while. So if ERDI typically leads and we haven't really seen a big bounce, then I do think that we'll have ourselves a bit of a slide. So we still have to see what happens, of course. So let's take a gander here at gold. So gold is a little bit weird. I still want to see some more. I want to see some more development out of the 10-year yield first before we make any calls for gold, gold, I would rather long gold than short gold, just because of what's potentially going to happen here with the yield. I also kind of think that we're seeing this head and shoulders pattern where we might slide down a little bit more, and that that could be just pie in the sky right now. But at least the C leg here I think might be reasonable, that we have here on the chart. Now, if I draw just like a line here, it would end up developing into a channel, and you can make the argument that we're coming up close on this sort of move here, where we have a huge consolidation pattern, and it also looks like a cup in the handle over a whole bunch of years, of course. But I mean, of course, it's going to take time, but this is still one of these things that I think is going to be realistic. I just want to see if we can time the bottom at least, or get close to the bottom where we can pick up some longs and hold them for forever. Uh, and by forever, I mean a reasonable amount of time. All right, let's look at oil. I don't know what's going on with oil here. Let's look at the hourly. I posted a chart earlier today about this. I think Alex had a question, but if we're looking at what the what oil is doing here, we could see another pop up here to test this, or test this moving average or test the top line here. But I still think that this is a little bit more realistic, where we might see um, like a finishing sort of move here. And I don't know how deep it's going to go. Nobody really does. But if we get something around 70, or let's say we could even get closer to like the 68.5, that would be awesome. And if we zoom out again, we could see, that was actually the last price target that we had, before we ended up making money in December off that. So I think, long story short here for oil is that we just need to see what's going on. We were short, but I think it's better to be long than short here with oil. So I'm also looking to get out of the TMF hedge here, and try to make sure that we are properly positioned. All right, so I think that's about all the rambling you guys can probably endure. So thanks again for watching and listening. I hope the Bears get some red meat this week. All right, thanks everybody. Have a good week.